Hey guys, KJ here with Alpha Trading, and today I'll be showing you guys the inversion fair value gap model. So first thing we look for is a liquidity sweep or reaction of a high time frame PD array, which in this case we have buy side liquidity swept up top here, and then we look for a SMT, which is optional, which essentially means ES making a higher high, and NQ or any other correlating asset failing to do so, which this is where the big money starts to step in. It's not mandatory, but it gives you a higher conviction and a higher win rate. And third, we look for a fair value gap getting disrespected. So this is the key step right here. Look for a fair value gap that you look for it to get broken through, which essentially means a mean reversion or trend exhaustion. And then you look for a change in state of delivery. So that means a higher high or a higher low getting broken. So you can mark it out right at this level right here. So then you look for a one-to-one risk reward or target opposing liquidity. So in this case, we're going to go short. So we got all the criteria met, and then we're going to enter ideally at the retest right here, and then we are going to go target these shorts right here, these lows, and then we are going to make our stop right above that inversion fair value gap. So this is set as 2 risk reward ratio. So here's a bullish example. So first things first, I've got the previous day low marked out right at the bottoms. And then what we're going to look for is that change in state of delivery. So like I said, it's a higher higher, lower high getting disrespected. So in this case, we've got that lower high getting broken through right there. And then next, we're going to look for an inversion fair value gap, which happens to be nicely right around this level right here. Which also got counteracted by a bullish fair value gap. And in this where I'm going to look to go long. So right when it breaks right there, I'm going to aim for a one-to-one, or I'm going to target opposing highs. And my stop is going to be right below the change in state, giving me a nice one-to-one RR trade. So here's a bearish example for you guys. So first things first, we look for the liquidity sweep, which in this case, we've got the relative equal highs marked out at the top. And then we're going to go ahead and look for a change in state of delivery, which we can mark out with this higher low right here, getting disrespected. And then we're going to go ahead and look for the inversion fair value gap. So we see a fair value gap right here, aligning perfectly. So initially it broke out of it, and then it went ahead and retested it, giving me a stronger conviction. So my short position is going to be probably at these lows right here, and then I'm going to target the relative bottoms. Then my stop is just going to be right above these PD arrays right here, giving me a RR of 2.67. Not bad.